Hey, this is Brian McCarthy with a Macro Minute on the possibility of intervention in dollar-yen next week. Here we are on a blizzardy Cape Cod. I know much of the eastern half of the United States is dealing with similar conditions, and I think this is a great metaphor for what financial markets might look like should the U.S. Treasury decide to get involved with intervention in dollar-yen on behalf of or in coordination with Japan's Ministry of Finance. So if you caught my video last week on Japan, we should be anticipating intervention in dollar-yen. They've been very clear that they do not want the yen to weaken beyond 160 to the dollar. There's no constituency for a weaker yen in Japan. Labor unions want the yen to strengthen because they don't like inflation. Businesses want the yen to strengthen because import prices are pressuring their margins. And the government wants the yen to strengthen because inflation is a political problem. And a weaker yen will put more pressure on the BOJ to hike rates faster. Nobody wants it to happen. They're likely to commit to that 160 line in the sand as they signaled this week. So what happened on Friday? It looks like in Japan time, the Ministry of Finance made some calls to foreign exchange banks to sort of nose around the market to let them know that they were there. They didn't do anything yet. And then around noontime in New York, the Federal Reserve started calling U.S. banks, checking rates in dollar-yen. What does that mean? They just call the trading desk at Bank of America or JP Morgan or another large bank and say, hey, where is dollar-yen trading? Okay, how much slippage would there be if I were to sell half a yard? Okay, nothing to do for now. So what's going on here? It's unclear yet whether the Treasury would commit to actually intervening on behalf of the Ministry of Finance. I think that would be a very big move. For now, they've gotten dollar-yen from 159 and change down to, 155 handle without selling anything. So far, so good. It's been an effective sort of threatening exercise. But I think it's a huge problem for U.S. assets should the Treasury actually get involved in selling dollar-yen, even if on behalf of the Ministry of Finance. I don't think there's any way the U.S. will sell dollars for its own account and buy yen for the Exchange Stabilization Fund at Treasury. That's not going to happen. But the fact of the matter is they haven't done anything at all since 2011 when a number of global central banks came in to help Japan support the yen in the wake of the earthquake. Perfectly sensible. And in 2024, Japan had a fairly successful intervening exercise when they sold 30 to 50 billion dollar yen and knocked dollar yen down from 160 to a more controlled level. That didn't require any action on the part of the U.S. Treasury. So why would this episode require U.S. Treasury participation? It's clearly a yen problem, not a dollar problem. And I think the big problem, should Secretary Bessent agree to act on behalf of the Japanese Ministry of Finance with a sort of show of solidarity here, is that it would suggest that the Treasury actually wouldn't mind seeing the dollar itself fall broadly. Huge error. Why? The market's already very, very nervous that this administration is a devaluationist in its leanings. Secondly, the entire world, particularly Europe, Canada, many others, are just freaked out about Trump right now because of the Greenland gambit, threat of tariffs on Canada, and there's just a lot of angst and nervousness abroad. And this has fueled this narrative that global investors are going to dump treasuries. That is like a puddle of gasoline awaiting a match, and an active intervention signal from Treasury that they are sort of leaning towards wanting the dollar weaker is just an invitation to sell U.S. assets, particularly treasuries. Nobody wants a problem in the treasury market right now. And I think any intervention action on the part of the U.S. Fed at instruction by the Treasury would be a huge problem for U.S. Treasury bonds and notes, and probably bleed into volatility in the equities. So it'll be a huge mistake if Treasury gets involved. They're coordinating with Japan to check rates on Friday, suggests they're very seriously signaling acting in the foreign exchange market next week. Buckle up, it will be a shitstorm for financial markets, particularly the U.S. Treasury market, if Bessent decides to pull that trigger. Good luck out there.